Have you ever thought about how some people's money seems to work for them, even while they're sleeping or just living their lives? It grows, it compounds, and over time, it builds a path to financial freedom. The stock market can sound super complicated, maybe even a little scary, especially with all the stories you hear about people losing money. But here's a little secret most beginners do get told. The stock market is a casino. It's a system. And once you understand the system, it becomes a powerful tool instead of a mysterious risk. In this video, I'm breaking down the stock market for absolute beginners. No finance degree needed, no confusing jargon, just simple, straightforward explanations. If you've ever asked yourself what a stock actually is, how people make money with them, or why prices are always going up and down, then you're in the right place. We're going to cover everything from the ground up, starting with what happens when a company decides to sell shares to raise money. We'll dive into the difference between buying stocks directly from a company and trading them with other investors. You'll see how the simple concept of supply and demand makes prices move, and why it's not about timing the market perfectly. We'll also talk about the magic of compound interest, that incredible force that can turn small regular investments into a serious nest egg over time. Plus, I'll explain why diversification is like your personal bodyguard in the market, protecting you from unnecessary risks. My goal here is simple, to show you that investing is on some exclusive club for the rich. It's a tool that anyone can use to build wealth, whether you're saving for a house, planning for retirement, or just want to create a little financial security for yourself. So, let us pull back the curtain on the world of finance together and take the first step on your journey to financial independence. Thanks for watching, and if you find this helpful, don't forget to like and subscribe for more content just like this. To truly understand the stock market, the first thing you need to realize is that at its core, it is simply a place where ownership of companies is bought and sold. When you buy a stock, you are not just buying a symbol on a screen. You are buying a small piece of a real business that sells real products and services. Companies enter the stock market because they need money to grow, maybe to open new factories, develop new technology, or expand into new countries, and, instead of borrowing all that money from banks, they sell shares to the public. In return, investors get ownership and the potential to benefit as the company grows. Stock prices move every day because millions of buyers and sellers are constantly reacting to news, company performance, economic conditions, and most importantly, human emotions like fear and greed. When a company performs well and people believe it will do even better in the future, more investors want to buy it, pushing the price up. When expectations fall or bad news appears, people sell, and the price drops. This up and down movement is normal and not something beginners should panic about. Over long periods of time, strong companies and the overall market tend to grow, which is why investing is usually treated as a long-term game rather than a way to make quick money. There are different ways to participate in the stock market, and beginners often make the mistake of thinking they must pick the perfect stock to succeed. In reality, there are investment options designed specifically to reduce risk, such as index funds and exchange-traded funds, which allow you to invest in dozens or even hundreds of companies at once. This concept, called diversification, is one of the most important ideas in investing because it protects you from relying on a single company's success or failure. Instead of trying to guess which company will win, you spread your money across many businesses and let overall economic growth work in your favor. Another key idea is understanding how investors make money, either through price appreciation, when the value of your investment increases, or through dividends, which are regular payments some companies give to shareholders from their profits. Neither happens overnight, and that's why patience is critical. Many beginners lose money not because the stock market is unfair, but because they let emotions control their decisions. Buying stocks because everyone on social media is talking about them selling in panic during a market crash, or investing money they might need in the near future, are common mistakes that can easily be avoided with a simple plan. A smart beginner approach focuses on long-term consistency rather than excitement. Investing small amounts regularly, regardless of whether the market is up or down, helps reduce the risk of bad timing and builds discipline. This strategy, known as dollar-cost averaging, allows you to buy more shares when prices are low and fewer when prices are high, without trying to predict the market. Choosing a reliable brokerage platform, starting with a small amount you are comfortable with, and sticking to a clear strategy can make investing feel far more manageable and far less stressful. Finally, it's important to understand that the stock market is not about being right all the time. It's about staying in the game long enough for time to work in your favor. Market downturns, crashes, and corrections are part of the journey, and they don't mean the system is broken. For long-term investors, these moments are often opportunities rather than disasters. The goal as a beginner is not to master everything at once, but to build a solid foundation, avoid major mistakes, and gradually increase your knowledge and confidence. When you approach the stock market with realistic expectations, a long-term mindset, and a simple strategy, it stops feeling like a risky gamble and starts feeling like a practical way to build wealth over time. If there's one thing I want you to take away from this video, it's that the stock market is not something reserved for experts, rich people, or financial geniuses. It's a tool, and like any tool, its power depends on how patiently and consistently you use it. You don't need to predict the next big stock, time the market perfectly, or understand every financial term to get started. What matters far more is building the habit of investing regularly, thinking long-term, and staying calm when the market moves up and down. The most successful investors are the ones who are always buying and selling. The ones who stay invested. Give their money time to grow, and don't let fear or hype control their decisions. Remember, confusion is normal at the beginning, and feeling unsure doesn't mean you're doing something wrong, it means you're learning. Start small. Keep things simple. Focus on strong fundamentals like diversification and long-term growth, and allow your knowledge to grow alongside your investments. If this video helped you feel even a little more confident about the stock market, that's a win. Take the next step at your own pace. Keep educating yourself, and don't rush the process, because in investing, time and patience are often more powerful than talent or luck. And if you want to keep learning, make sure to stay connected, because this is just the beginning of your investing journey.